Hi, I'm Dr. Drew, and welcome to my YouTube channel. This is a channel not on medicine, but on all the other aspects needed to live our medicine lives. Today, we're going to be talking about what is a stock. Well, a stock is known as a share. It is a type of investment that represents ownership in a publicly traded company. Now, you could also own shares in a privately owned company. When you purchase a stock, you become a shareholder of that company and have the potential to earn a return on your investment through dividends or capital appreciation or both. Now, why is knowing about stock important? Well, as a physician, it's important to understand stocks because they're a common form of investment and can be a good way to grow your wealth over time. This entire financial literacy course revolves around information around knowing index funds, mutual funds, private stocks, public stocks, stock exchange, ETFs, various other concepts. And I'm trying to boil these concepts down to 5 minutes at a time. And it starts with knowing what a stock is. And essentially, to give an example, it's like if you have a pie and you essentially invest into the pie, you get a portion of that pie and get to enjoy the benefits of the portion of the pie, but not the entire pie, because then you would be buying out the company essentially, and you would become the owner of the company rather than a shareholder of that company. Now, the other reason why it's important to know about stocks is by investing in stocks, you have the potential to earn a higher return than you would in a traditional savings account or bond. And this goes back to the risk return portfolio or profile, in the sense that the theory is that the higher the risk premium you take, the higher the potential reward that you could get. Now, there are obviously nuances around that, but stocks are considered one of the best ways to grow your wealth over time and build your nest egg. Stocks also, however, come with more risk, as the value of the stock can fluctuate and you could potentially lose all your money. So some private companies, examples would be Theranos, which was a healthcare company. Public companies, well, there are many examples, specifically around recessions in 2008, a global financial crisis. The example that comes to mind is Enron around the dot-com bubble. And even real estate companies can also collapse. So any kind of share in a company can collapse because of its balance sheet not being liquid enough to tolerate market forces. Now, how does one use this information to their benefit? So one way a physician can use stocks is through diversification of your portfolio. And we will talk about how a stock is divided into sectors. So it can have various sectors such as industrial, financials, insurance, oil and gas companies, and green companies, and so on. So these are the different sectors of the stock. And then also they may be different types of stocks, such as a preferred stock, which is dependent on the capital stacks. And we'll cover that in the information on capital stack. Or you could have common equity or common stock, which is what generally most people are aware of. There's also index funds, which we'll cover in the future videos on what an index fund is, because it's related to this concept of a stock. Now, by knowing stocks, you can diversify your portfolio, and it can help reduce the overall risk of an investment portfolio by spreading investments across different types of assets and industries. So you can diversify within the, for example, financial industry by choosing different banks like RBC, TD, CIBC, Scotiabank, or you can diversify using different industries by combining banking and oil and gas companies and the tech sector and so on. So you can all combine that into a mutual fund or an index fund, which we'll cover in the future. Another way is also to understand the concept of dollar cost averaging. So it's an investment strategy in which an investor regularly invests in a fixed amount of money into a stock or other investment, regardless of the price. By doing this, an investor can take advantage of market fluctuations and potentially purchase more shares when the stock price is low and fewer shares when the stock price is high. It is a strategy, however. There are papers written on lump sum investing versus dollar cost averaging. And that's 5 minutes. So in conclusion, Stocks are an important investment for physicians to understand. They can be a good way to grow wealth over time, and diversification and dollar cost averaging will be your friends in the long run. It's important to remember that stocks come with risk and other types of investments, which we classify into the world of volatility. It's important to consider your risk tolerance, risk capacity, and overall financial goals to determine if stocks are the right investment for you. And it's important to consult with a financial advisor before making any investment decisions. So on that note, thank you very much for taking the time to listen to this episode. A few action items. If you'd like to follow the exact frameworks used by affluent physicians to take back control of their time and money, then check out the link in the description below. I make these videos because I am passionate about fighting burnout in 10,000 physicians across this world. These videos are a start to that. Come and join my community of like-minded physicians in my free Facebook group where we share resources like cheat sheets, calculators, and everything in between to live the best medicine lives. Thank you very much for listening. Thank you for providing care to your patients. And don't forget to share, like, and subscribe. I'll see you in the next episode.